Hello, future millionaires. Um, I want to remind you that YouTube only refers these videos if you like and you subscribed, and you don't have to be subscribed, but if you like it and you comment, comments are really big. So I'm going to ask if you made money today, drop it in the comments. If you lost money today, drop that in the comments too. There's a possibility I've experienced the exact same thing you're going through, and I might be able to help. And I always answer all of my comments. Right. So let's get into the price action for today. It is still going, but if you watched my video yesterday, my hypo was that we would push down during Asia, possibly take out this 4-hour RTH low, and then offer up to 6,900, where we had these relative equal highs on the 4-hour. And we did exactly that. If we go to extended, I said we may even go down to this yellow line, but we didn't do that. We go extended hours, you can see Asia opened and pushed down, took out this 4-hour regular trading hour low, and then we offered all the way up, back up to 6,900. This is all after the market opened. This is as high as Asia got. We went all the way back down to settlement, pre-market and when the market opened, and then we went right back up and took those out. And that was also another hypo. I said, I think we could probably go up there, pull back again during New York, and then make another run on it. And that's exactly what we did. So price action for me was pretty good today. Unfortunately, I did not trade most of it. The only thing I traded was these highs. I sold at these highs. For push back to round number. All I wanted was round number. Made my money, got out. But I want to look at this before I go to the smaller time frame. We do have some areas up top that are of interest. I don't know why that. I know why this is down, because all of these, when it came up close and then left the relative equal highs, I decided I'm going to put it a little bit lower. So, I mean, I could even put it over here, but we definitely have some 4-hour regular trading hour. We're not going to look at the other relative equal highs right there. This one pushed up and didn't take it. This one's lower high. Now we're down here. This fair value gap here is possibly going to be respected, and we may possibly start offering lower. We do have, I think this is a monthly low. Let's see. Yeah, right here is a monthly low. But this one took it out. We also have a gap in price action here. But we've been in this range for a good while. It seems like we might break it at some point. We have that little volume imbalance on the monthly. We wicked into it there. The only thing, we're either going higher or we're going to offer down to some of these. This little area right here, see how that wick is higher than this one? There would be deep pocketed people could possibly have stops right here. Well, that's a long way off. That's 63.44. But offering down to one of these levels is not quite so far away. So maybe we did push up into that fair value gap, and maybe we do start offering lower. Don't know. Maybe this is all the lower liquidity we wanted. It's the bottom of the range, and we start offering up to these and the all-time high again. That's to be determined. But I do like the way that it bounced off of this midpoint of this fair value gap and then rejected. Will it continue to reject? We'll find out later as the week progresses. Now let's look at the price action. The first 1-minute candle did some good work today. If you were watching it, I unfortunately was not able to be at my computer when the market opened, or I would have caught that nice little run, but I didn't catch it. Here's our first 1-minute candle. I'll make it a different color. like I like to do. And I'll just use settlement as the low of it. So we don't need that one. We went down, opened down, went to settlement line, chopped around a minute, pushed above, right back down to the midpoint of it, and then broke through with a fair value gap to the upside. You could jump in here. There's not a whole lot of places to enter except for that one when we pulled back. But, that did get us above there. Definitely going to make a new high there. So you could jump in there, or you could jump in just as soon as we cross over that again. It's up to you. But of course, your stop will need to go down here. So at least below these lows. So if you got in there somewhere on that green candle and your stop was down here, that's 15 points. It's $5 for every point on one micro. So 15 times 5, that's 45 bucks. So maybe you put on 2, you're risking 80 bucks. And you catch a really nice run all the way to round number and beyond. I already moved this line. It was down here. This was the regular trading hour high from that I had marked out from those relative equals. It was actually right there. So you could just aim for that and you would have got a decent amount of points. Getting high at the high of that range, that's 22. So one micro, that would be 5 times 20, $100. 2 of them will got you 200 bucks. I don't know what size you trade, but you could certainly make a lot of money on that nice little push. Like I said, I missed that one, but we came up here and we consolidated for a good long while. Fed minutes coming out at 1, so it was a little ambiguous, but I did take a trade up here. Once this range got established, I determined that we probably would not offer very much higher if we offered any higher at all. So as it went down, it was leaving these lows and then pushing back up. I went ahead and sold on this push back up and just aimed for the low of the range. I was actually aiming for round number here, 69. And I put my stop up here where it wouldn't get wicked out, but it would have to be very clear that we were going to go ahead and start pushing higher. I didn't want it to take this wick by just a couple of ticks or even a couple of points and then fall out of bed, which the equities was known to do that kind of stuff. So I wanted to make sure that it didn't get wicked out, but I wanted to make sure it wasn't going to steal all my money either. And that's where I made my money on that push down. Let's see. Yeah, so that was a really nice bounce. It came back down and bounced again. I was expecting it to go all the way to settlement. Once it's in this, we're back in the range. Leave it alone. The low of the day is there, high of the day is there. If you're going to try to get into a position, it needs to be here or here. So that's what I want to talk to you about with regard to my trading yesterday. I do this all the time. It's a habit I developed when I first started. This is a retail trader's downfall. We don't have to use this chart to that necessarily illustrate it, but it works. But let's just talk about like gold for a minute, or Bitcoin, or anything that's done just a freaking mental rally. The retail trader, they don't know anything about the market. They don't know things go up, things go down. They just start hearing in the news, oh, Bitcoin's at $118,000. And they get on their Coinbase app and they buy that sucker at the highest highs it's ever been. They're thinking, oh man, I need to get in on this. And they buy it at the highs. Or gold selling higher than it's ever been. It's up to $5,500 spot price. And maybe they don't even pay attention to gold ever. But when they hear that, daggone, gold is going through the freaking roof. And they go in there and they buy it at the highest highs it's ever been in history. As day traders, I hope we're learning that we don't do that. When it's at the highest highs it's ever been, is not the time to buy. Okay. As we're learning this, trading thing, that's what we've learned. The highs are usually a place the market reverses, not a place to buy. But that retail trader mentality is still stuck in my head, even though I know better. Even though I know better. So I can give you an example. We had this 4 hour relative equal high here that we were aiming for. Actually, yesterday, it was this one. It was those relative equal highs that we had up here around 6,900. And then we had this level down here on the low side. I got into this trade and I made $800 on the push down here. And then we came back up and I saw, that's a lower high. I bet you we go to this level. And as it started pushing down somewhere around here, I think once we took out that fair value gap, I ended up selling short somewhere around right here. And then, of course, it came down, it consolidated. And I'm like, yeah, it's definitely going to take that. And my stop was way up here. And then this rip started going and going and going. And I was like, it's just going to take that high and then it's going to go back down. It's just going to range here a minute. And I moved my stop. I'm not supposed to do that, but I did. And then I moved it again. And I was like, dadgum, is this move ever going to stop? There's got to be a pullback somewhere. And I kept moving my stop and moving my stop. And once it got up here and took out that high, I was like, surely we'll get a pullback here. And we did. We started to get one. And so I just added to my short position until 68.50 was my break even point. It pushed down and I got out. That was a dangerous move, but I did manage to get out without any damage. But the point is, I sold at the low. I sold at the low. Don't do that. That's that retail mentality. If it's already pushed down this far, getting in down here, it's just a bad. It doesn't make economical sense. Even if you were right, even if it did push down to this low, that's only like maybe 15% of the move. Getting in up here was where you should have got in. If you missed it, you missed it. Don't try to catch a few points here. They're not worth it. There's not that much money on the table. So you just wait for your reversal. If it does take that low, then you wait for your reversal and you go high. Okay, so don't do that. Now I've got my $800. I managed to salvage it on this deal. And the market comes down, messes around down here, and then starts pushing up. And I'm like, I don't know. I don't know if it's going to make a new high. And then it did. And it got into this consolidation. And I was like, okay, this sucker is taking those relative equal highs today. And what did I do? I bought at the freaking high. Just like that retail gold trader that says, oh man, yeah, this thing's going to keep going up for the rest of my life. I bought at the high, expecting it to go there. Once again, does that make economical sense? The majority of the run is over and you're just going to try to catch the last few points, 17 freaking points, when we had all these points on the table? You're going to buy up there? That's what I do when I'm trading poorly, I promise you. And I convinced myself it's actually going to happen. So yesterday, I tickled myself. I said, today my trading plan is going to be to let the market go up just as high as it wants to go. And when it looks like it just can't go any higher, I'm going to buy that sucker. And then when it falls out of bed and it goes just as low as it possibly can, and I just can't imagine it going even one tick lower, I'm going to sell that sucker. And I said, yeah, that's going to be my new trading plan because that's basically what I did yesterday, and I've done it some other days in the recent past, rather. That I'm like, why do I keep doing that? It doesn't make any logical sense economically. It's only just a few points away from the high. There's no sense in getting in there. Only a few points from the low. There's no sense in getting in there. It just doesn't make any sense to do it. And selling here may maybe make a little bit of sense for a pullback. Selling here makes a lot of sense for a pullback. Right now we're in the middle of the range, so none of that makes any sense. It could go in either direction, anywhere it wants to go. But always, my plan going forward is do the opposite of what I just said. I'm not. I'm really not that interested in catching a run that starts in the middle of the range and starts running towards a high or low. Like if it started here and it started running up there, I would rather wait for it to get here and then catch the pullback. Even if it's a directional day and I miss the entire move, I would rather let it get to where it's going and then catch the pullback. That's a more that's a higher probability trade than to try to get in somewhere on the way to that run because it can really bounce around before it ever gets there. So I don't know. On this particular one, this was a nice trade. You could have gotten in and got the money there. But once again, from the low, it's still a good ways off from the low. So it could have come back down and revisited the low. And you would have had to have a pretty big stop loss to keep yourself from getting stopped out, 30 points or more. So keep that in mind. When it gets up to the high, it's obviously found some sort of a high. Cheap trade is going short at the top of that range. And if you're doing what I'm doing, where you're buying at the highs and selling at the lows, quit it. It doesn't make any sense to do it. Even if you do catch an extra 10 points, it doesn't make any sense. So what about tomorrow? Did we talk about that? Yeah, we did. So we have respected the halfway point of this 4 hour fair value gap. There is a possibility that we start offering lower. I think the seasonal tendency is that we offer lower this time of year, but I'm not 100% sure. So our best bet is just to read price action and respond accordingly. This yellow line down here is 50% of, I think, no, this is 50% of yesterday. So if we do want to push higher, we might want to pull back to there, or maybe the 50% of today. But those 50% levels are important levels to the market for some reason. So I always like to mark them each day. You can do 50% of the week, 50% of the previous day, however you want to do it. That's kind of interesting that we pulled back to the high of the opening range, 1 minute candle, and then here we go pushing back up to 69. That first 1 minute candle the market does definitely refer to it. All right, that's it for me, guys. Um, Thanks for watching. We're going to become millionaires one of these days. Guarantee it.